Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein with your weekend edition of your metal update. And this is for Friday, the 11th of January, 2019. So here we are, another ending period of a week. We're going to do the monthly chart in gold first, then go to the weekly charts only. During the week, I do the daily charts, but weekends, I like to look at the bigger picture with you. Keep in the back of your mind that as I'm doing this, the government is still shut down. We have heard good things with Chinese trade and that the Chinese delegation in January, the end of January, will return now to America with the bigger negotiation team. In other words, the more, I hate to use the word because I don't want it to sound wrong, but those of the more cabinet levels. We'll have Mr. Mnuchin there, Mr. Lighthizer. They're all going to be in, so we're getting closer. Remember, March isn't far away. I don't know how the president's viewing what's going on. We haven't seen anything yet. Super material is the problem. Words won't do it. I think the Chinese have to show that they're going to enforce intellectual property rights and enforce those for these things to move right. Metals are flat in the water. What else can you say? This is interesting. You know, a week ago, I remember saying I thought volatility was going to start coming out of the market. I was on the money. It is coming out of the market. Now the market has to decide what to do next. We're no longer getting the 1,000-point day ranges in the S&P. Metal markets aren't exploding up and down. And with the last currency fiasco we had when the yen, when it ran dramatically 300 points in one day, you've got nothing like that. But what you do have coming up is in Britain, remember, you've got the vote on Brexit. Nobody knows what's going to happen. You may end up with another referendum vote before it's all said and done. When you look at gold, it is neutral, and it's now, if you really study what's going on, this market has been neutral for 2.5, 3 years now. It's just been drifting in this defined range of the Bollinger Bands going sideways. Had a good year relative to some other asset classes because it got a late in the year rally. Remember, each bar represents a month here, so that's good. When we take a look at the weekly chart on the bigger picture, you can see you've gone from 1176.60, and this is the highest close that we've had. This is just an area chart of closes. Come on, it's done very, very well overall. Fibonacci, you're at a very important level. The idea here is you take from the high to the break low, and then you get your 38%, 50%, and 62% standard retracement levels. Notice where you're stalling out. You first stalled out, and we can come here, in what we call this box, and it forms with the 50% down to the 38% area. If the market can clear that, the next box, if you will, is up to the 62%, 50% area. That's where you're at right now. Clear that, I throw the Fibonacci numbers out and say the market's left that. This is an area where the market is susceptible, that's all. It doesn't mean it's going to turn bearish. It means it's used the thrust of the bounce up, and now the question is, what next? When I take a look at swing lines, I have a pattern that began way back here, actually, of higher lows, you see them, and higher highs. That's bullish. The definition of an uptrend is higher highs, higher lows. To break it on the weekly chart, you've got to get back under 1234.10. When I take a look at key moving averages, one of them that I use is the 18-week moving average of closes, which is right here. Another, if you wanted to look at it, it's the 200-week moving average, and even another is the 100. What the market is online to do is get a bullish crossover, whereby the 18-week gets over the 200-week. So the shortest term gets over the longest term. Traders will take note of that as market technicians. And where does it come in? Very close to that last break low. Now we can see that the 100-week average You stalled at it for 2 weeks. You got up to it, then you hit right here. So I would expect that on pullbacks, what was resistance can become support. I wouldn't be surprised if 1268 offers a level of support. In terms of the Bollinger Band, the market got over the Bollinger Bands, and as you can see right now, the last quote is underneath it. The market had gotten over it for a couple of weeks in a row here, and now it's pulled back in. That's all that you can say. Bollinger Bands give you an idea of where resistance comes in, and when the market's over it, it's excessive. When it pulls back to the right-hand side, it's out of the excessiveness. In terms of momentum, even though volatility has slowed down, momentum is still very much in an uptrend. So I have upside bias, momentum, and bias up. The market got, I think, ahead of itself, and now it's in that bit of a corrective mode. When I look at the gold-silver ratio, the lower this goes, the more I like metals as a group. And the reason is that means that the economies are using whatever it is, the silver market versus the gold a little more. I am not in the camp that silver is the precious metal that you all think it is. I can understand prices of platinum, palladium being $1,000 an ounce, but an item that is sitting here roughly in silver at $15, I just don't consider a precious metal. When I look at the weekly bar chart of the GLD ETF, bullish, it too pulling back to the right. It had resistance at the 100-week average. I'm going to look for support to be there on the first pullback. And the market that the GDX miners, momentum is up, the bias is up, the trend is up. It's been fighting a battle for about a month now, back and forth at that upper Bollinger Band, not going that far. But it too, very much in the bull camp. Then you get to the silver market, which from this area right here propelled itself sharply higher. Momentum is still up. I would have liked to have seen the market, if you will, being underneath the upper Bollinger Band. It's not going to be. It's going to close over it this week. All right, it could pull back to the right on it Monday or Tuesday, so keep your eye on that one. In the copper market, you're still very much in the sideways band, and I do realize you tried to get one move, or maybe you were hoping for a breakout there. You got under the band here, but you threw yourself right back at it. Obviously, copper's very concerned with China. China consumes approximately 50% of the world's copper. And as you're seeing all the numbers out of China drop away, be it production, exports, internal consumption, problematic for the market, and it's adjusted. It's gone from a 330 market down back into a market that is sitting here for all purposes down, what is that, about 80 cents lower? That's pretty good. The market has adjusted. The platinum is still, on the bigger picture, a bit bearish. Lower highs, lower lows, fighting at that 18-week average. Momentum has flattened out. The palladium's the strongest of the metal group, and I think I'm a broken record in saying it. Why? Because you're at all-time highs. You don't need me to tell you when a market's at an all-time high, it's stronger than everything else. Part of the reason has to do with where this market comes from. Palladium comes from South Africa, problematic supplier for us possibly. Certainly Russia, a problematic supplier, and away you go. And it's interesting, Russia is now declared that they're going back in, and their oil prices have gotten high enough where they're back into the world reserve market, so they're going to start buying foreign currency reserves again. That should be an interesting play, because as they do so, I doubt that they're going to buy the ones that we think. It should get quite interesting with what they do. In the dollar looks bearish. Simple discussion. Lower highs, lower lows, downtrend. Under the 18-week average, downside bias, momentum pointing down. I can argue that the first support, market's challenging the 100-week average, trying to offer support there. I can make a better argument that the 18-week is a resistance area, and if the market wants to propel and prove it's bearish, it has not hit in a lower Bollinger Band in a long time. To me, that would be the nail, that you're saying, okay, I see it and I understand that that's what you're doing. I discuss this in a lot more in my written updates, and I don't know if you know it, but I also put out daily oral updates, and that's away from my videos. Then in the morning I do a video for people that are my subscribers where I cover 40 charts and throw out all kinds of day trade ideas, position ideas, what I think is going on. Not what I do here. In my morning video I can say buy here, sell there, do this. I have to be generic on these videos because there's no password on these. Therefore, anybody can see them. In order to watch my other videos, you need a user ID and password. We'll give it to you with your free trial. Here's how you get it. Give us a call. Go to our website, sign up for my free information. Away you go there, or click here. I'm Ira Epstein. Have a great weekend. I'll see you all Monday.